conference call for declaration of the third quarter results for the financial year FY18. With me are Mr. Dilip Malu, who is the CFO and Vice President Finance, and Kushal Maheshwari, Head Treasury. I would like to take this opportunity to introduce Mr. Sandeep Verma, who is the President Sales and Marketing, to you all. Sandeep heads the marketing, handles all the sales verticals of this company, as well as all the innovation initiatives being undertaken by the company. The company has closed the quarter with a turnover of 197 crores. The growth in turnover vis-a-vis the third quarter of the last financial year is 5.86%. The volume growth is 5.17% for the company. The volume of our hair oil brands has grown at 8.3% in this quarter in the domestic market. The EBITDA is at all-time high of 35% and is at 69.1 crores, which is a growth of 10.87% over the EBITDA of Q3 of financial year 17. Please note that while calculating the EBITDA, the budgetary support announced by the Government of India for units under the excise-free zones in Uttarakhand, Himachal and Assam has been accounted for. The PAT and PBT for the quarter is 55.17 crores and 70.15 crores respectively. Keeping the increase in operating profit in mind, the company has announced an all-time high interim dividend of rupees 12 per share. Though business is settling down post the implementation of GST, there are still some issues relating to claiming of refunds, filing returns, and also GST forms related to trans-2. In addition to this, the growth figures on a Q-over-Q or a Y-on-Y basis are misleading. To put into perspective, even though that the growth in the turnover is 5.86%, this is not a like-to-like comparison. The primary reason for this is that the sales value last year has been netted after a 14% VAT impact. However, this year, the tax impact is GST, which is largely 18% for our company. If the turnover is compared on a like-to-like basis, the growth for the company in this quarter is 10.08%. This is led by a growth in domestic business of 13.38%. The growth in total hair oil has slowed down in the third quarter, as against a volume growth of 6.7% in the second quarter. The offtake growths have dropped to 3.6% in this quarter. For the light hair oil segment, the growth in offtake volumes for this quarter is just 2.3%. As against these segmental growths, Bajaj Almond Drops has grown at 3.7% by volume. As a result of this, the market shares of almond drops in light hair oil as well as total branded hair oils has gone up during this quarter. The growth in the rural areas has remained weak. In the LSO segment, the rural volume growths have dropped to just 0.5%. As against expectations after a good monsoon, the revival of rural optics has still not been witnessed in the hair oil segment. While domestic sales are showing definite signs of recovery, the business outside India is still a cause of concern. Domestic general trade business is showing a 12.3% growth in business after GST neutral scenario. Modern trade has shown a very good Q3FY18 growth, which is 14.25%. During this quarter, the CST business has shown a marginal decline of 2.7%, which is a significant improvement over the large decline witnessed in the second quarter. Though the trend in CST sales is positive, we cannot yet be sure whether there is a complete recovery on this front. The sales in the IB sector is a major cause of concern. There are strains in offtake in MENA as well as Nepal, which are our largest markets outside India. Part of this decline can also be attributed to infrastructure issues related to manpower and distribution setup in these two areas. Our initiatives in improving our reach as well as efficiency in sales systems are continuing to yield benefits. Our direct distribution has gone up with the induction of 300 sales representatives. The success of our project Sarthi has prompted us to implement the same in our rural task force as well as the modern trade merchandising team. In both these areas, we are sure to see efficiency improving post the stabilization of the automation initiatives. The Innovation Center is now working full stream, and the innovation pipeline is becoming impressive day by day. The next product launch should happen in Jan 18, post which we aim to launch a product every quarter. In an effort to increase the efficiency of the other support functions, we have undertaken departmental audits for QC, production, IT, and HR. For the same, we have employed the services of well-known consultants such as Aon Hewitt, PwC, SAP, etc. The objective behind this exercise is to help identify areas that need to be improved on. Once the recommendations are fully in place, we should see visible signs of efficiency in these departments also. The increasing price of crude has caused a strain in the cost of our raw and packaging material. The largest increase in cost is for LLP. As against a price of 46.37 rupees per kg, the price in this quarter is 61.22 rupees. Even after considering the input tax credit, the equated price is still 52.81% per kg for LLP, which is an increase of 14%. The current price has further increased to 72% now. There is, however, a marginal reduction in the price of refined mustard oil this quarter. Against a price of 83.97 per kg last year, RMO or refined mustard oil is down to 80.52 per kg. Post input tax credit, the landed rate is 76.69, which is a 8.6% reduction. We believe that the crude oil prices will not fall in the foreseeable future. Hence, we have bought heavily during the last quarter. Currently, our LLP stocks will cover till March 18. Nomarks is finally showing visible results in the pilot project we started in UP. During the third quarter, Nomarks has shown a 122% growth in turnover in UP. This has happened because of the investment in distribution as well as advertising. As a result of this, the brand has grown by 101% in the domestic market. However, the decline in the international business has dampened the growth in turnover for the company to just about 30%. However, these results have actually enthused us, and we plan to speed up the extension of the pilot project to other states in the coming quarters. We are now open for questions.
Sure, thank you very much. We will now begin with the question and answer session. Participants who wish to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Manoj Menon from Deutsche Bank. Please go ahead.
Hi team, very good morning, and first of all, a very happy new year to all of you. Three baskets of questions actually here. The first of all, actually I want to welcome Sandeep to the call. I presume this is the first call which Sandeep is attending. The first question is, we saw this Vision 2020. The question here is, 2020 is pretty much here actually, just about 18 months from today. So why not 2025? Is there any specific thought process, or would you be able to quantify some of the targets would you have for 2020?
Manoj, good question. I think you know that we have been under the process of change for the last 2 years. And the reason why we have put 2020 as the first milestone is that we believe that the first visible change in the way this organization works and is structured will be visible by 2020. Because like I've been pointing out in my con calls, we have been restructuring, getting good people, capable people around departmental heads, and bringing in systems within this organization. So the first visible change we have targeted, and that's why Vision 2020 and not 2025 or 2030 is that we will be able to go for the next level of change post the stabilization in 2020.
Understood. Understood. So any, you may or may not want to talk about in a call, but, would you have, some actually, would you be able to quantify some of the targets for 2020, anything which you have in mind, even if it's directional?
See, I think directionally we would look at a much more diversified. In fact, in the vision itself and the mission itself, we have targeted and said that we want to become a complete FMCG company. And you might ask, are you not a complete FMCG company? The thing is, from a largely hair oil company, we would like to move into a diversified FMCG company, and the first step should be visible by 2020. That's the whole thought behind the vision and mission that has been formulated. We have now started pushing and populating this to the rest of the company, and through our town halls and vision mission workshops, we are starting to get the whole team thinking the same way.
Understood. Just two questions and I'll come back in the queue. One, your commentary about industry growth does appear to be slightly different from what we have heard from the other companies which operate in the hair oil space over the last 2-3 months. So my sense actually was that segments like coconut oil and even amla, from an offtake point of view, and I'm not referring to the Nielsen numbers, but what at least these companies are experiencing, has actually kind of accelerated, whereas your commentary appears to be saying that the THO as well as your segment has decelerated. So how do I think about what's happening to the industry? That's point number one. Point number two, what's specific to the light hair oil business, also in the context of sources of growth and how that has changed the short term and the medium term on both.
Anuj, I think we are both talking about different sets of figures, because obviously since we are the first to declare results, we don't have the turnover or growths or declines of various other companies. The figures that we are speaking for is the Nielsen offtake figures. And like I've been trying to sensitize all of you, is that there can always be a difference between Nielsen and sales figures, because one is offtake, the other is primary sales. Having said that, yes, amla is perhaps continuing to grow faster than the rest of the categories. In terms of coconut, I think value growths are good, volume growths are petering down. But the overall statement that I made in my call was that the rural market for all of these are actually slowing down. And what we have done is we have actually, in the latest presentation that you see, we have also shown you our market shares going up sequentially. So if we are gaining market share, it gives you an idea of what's happening to the other sectors in the hair oil areas.
Understood. And just lastly, on the core business itself, which is the almond drops hair oil, how do I think about the changes to the sources of growth over the last 3-4 years, etc.? So how do you see this? I mean, so let me frame it a little differently also. So that is it that we need a big macro improvement push needed for almond drops to now get back to, let's say, double-digit volumes from where we are today? Or do you believe that the internal disruptions, if I'm to use the word, in the last couple of years, whether it is people or processes, itself has actually contributed to this slowdown? And now that both that has stabilized, you'll be able to actually drive growth significantly without really waiting for any macro push into, let's say, double-digit territory over the next 12 to 24 months on the core business.
I wouldn't like to attribute the slowness to the change process that we are implementing. Yes, change does become a disruptive factor for a small period, but I don't think it would be right for me to sort of park all the negativity or the slowdown to internal. It is largely to do with the macro. There's 3 or 4 things you need to know. One is that what was movement from pure coconut or the unbranded hair oil to value added has actually speeded up over the last few years. But rather than the premiumization, which was where our strategy was for almond drops, a lot of this conversion is actually going to the low-cost amla space. And quarter after quarter, you notice the commentary is the fastest growing segment is now amla and no longer light hair oil, which shows that it's basically the movement towards low cost is now faster than it ever was before. I think a large part of this is because of the slowdown in the rural areas, and therefore my commentary was that we are all waiting for rural to start coming back to speed, because if that comes, I think all the conversions from unbranded, which is largely rural, to value added will speed up even further.
Understood. So would it be correct to, form a hypothesis that if the low-cost amla, let's say start looking at profitability a little more, would that be a lesser headwind for you?
Again, this is outside my control, but the fact is, since crude prices and LLP are going up so steeply, the margins for everyone would be a problem, and especially so for the low-cost amla. So how they manage it is something which we will know in the coming months. But yes, that will be a strain on the low-cost amla. But I think more than profitability, it's the volume growth that need to come back. Because like I said that if you notice, the difference between the volume and value has shifted more than we expected this quarter. And that's because the sachets have not grown, whereas the bottles, which are largely urban and much better profitably for us, have grown much faster. This will shift once the rural areas start growing again.
Understood. Thank you so much. All the very best.
Thank you.
Thank you. The next question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Sir, my question is on the margins front. Crude-related inputs are going up. You have plans for much higher pace of innovation. So, how do you see your advertising spends and your EBITDA margin? You have managed that quite well even in this quarter. But are you willing to sacrifice the margins to get more volume growth and new product success?
I think I've said that over and over again. I believe EBITDA margin of 30 to 35% is very high, and I don't think we will be able to maintain that in the long term. We will not maintain it because the advertising spends may need to go up. But if it comes to advertising versus EBITDA, I think I would move towards advertising rather than maintaining a 34 or 35% EBITDA.
Sir, you have spelled it out earlier, but my question is there a specific number? Because if you have one innovation every quarter, how much of the spends, if a lot of companies give that number, that they will apportion, say, 10% of the profits in the innovation.
Abneesh, over the last years, I've always been telling you that I don't give guidance. So I would not give you guidance in terms of numbers. But logically, if new launches happen, spends on A&P will go up, and if you can't manage cost savings in the middle, EBITDA would go down. Having said that, we are looking at product launches which have fairly high gross margins. So a lot of the launches will be able to sustain themselves through the internally generated funds with a little bit help from almond drops.
Sir, second question is on the UP. This test pilot seems to have been successful. So what's the plan now on rollout to other states? And this very high growth, if you could talk about dealer level activity, either say in terms of commissions or incentive, is there something extra in terms of that dealer commission or incentive which is driving this? Or is it largely the selling part and the product differentiation part? What's helping this growth, if you could take us through that?
Abneesh, it's obviously not single focus that it's only advertising or only distribution. Like I said, that the UP experiment is about taking Noma's cream into chemist outlets. Now, like you would know, and all of you cover consumer and pharma also, the discount or the margins for a chemist or a chemist-driven distribution system are different. For example, in our case, we have a 5.5% margin for our distributors. The pharma guy has 10. We have a 10% margin for retailers. They have 20. So that change has also been implemented. So the no marks sale into chemist is at a different margin structure. The only thing we haven't changed is the credit. We still don't give credit for the pharma distribution system in UP. Apart from that, in terms of the sales force, it is totally different. The managers are different. Advertising you have seen is largely focused onto UP and the HSM belt.
Sir, next question and last one. So on modern trade, your growth was 20% last quarter. This quarter it's 14%. So how do you see growth here? And second, you said on CSD the growth is improving gradually. So is it now back on track? So most of the issues are resolved, and so growth could come back next year. Do you see that?
For CSD, like I said in my opening address, I'm not too sure because the changes are still happening in CSD in terms of the stocking pattern, in terms of closing smaller URCs, in terms of accumulating and reducing the number of depots and all that. So even though the growth is nearly flat now, I'm not 100% sure that the growth will come back next quarter. In terms of modern trade, the growth you said was 20 and now it's down to 14. But I think you should look at the base effect also, because last year in the year of demonetization, the quarter 3, the two areas that grew were modern trade and international business. So on a higher base, we have still grown at 14%, which is the fastest among all sales verticals in this company.
Okay, sir. That's all from my side. Thank you.
Thank you. The next question is from the line of Sameer Gupta from India Infoline. Please go ahead.
Hi, sir. This is Percy here. Want to start with a housekeeping question. This 107 million of operating income that you have booked, that is the tax refund. If I'm to understand correctly, that is just an accrual, right? You have not received anything from the government.
No, you're right.
Okay. And secondly, in the first quarter, you mentioned 64 million, and now it's cumulative 107. So this quarter, it's only 43 million. Is that correct?
No, that's not correct. The reason why I had mentioned and not taken into account was that the way the refund or budgetary support was supposed to come to us was undergoing changes. Like I told you last time, initially they had said that we would get back 58% of CGST. Now what has happened is we will get 58% of CGST minus input tax credit that you have taken. So 6.4 has actually dropped to 5.2, and the 5.2 is for the second quarter and the remaining is for the third quarter.
Okay, so going forward, I mean, henceforth, we should take somewhere in the region of about 45 to 50 million a quarter, approximately?
It depends on the turnover.
Yes, but I mean, at the current turnover, it should be about 45 to 50 million?
It should be more than 50 million because the fourth quarter is always the largest quarter for us.
Okay, fair enough. Sir, secondly, just wanted to probe a little deeper on this rural slowdown that you have been talking about. So is it a broad-based issue in terms of demand across FMCG categories in rural, or is it more sort of accentuated in the categories that you deal in?
I would say that it's across categories in FMCG. Non-FMCG categories are showing different kind of results, like you can turn around and say what's happening on scooters and cars.
Yeah, that I understand. I was talking mainly about broad-based. When I was talking, I meant FMCG only.
In FMCG, yes, I think it's across.
So what do you think is needed for this rural demand to pick up?
I think, of course, another good monsoon is definitely needed. I think subsidy to work from the government to rural growth is required. But I personally believe that the larger growth will come once infrastructure projects pick up, because a lot of the rural workers actually survive on salaries or employment on these infrastructure projects. Once that picks up, I think the overall economy will pick up faster.
Okay. And also wanted to touch upon your gross margins. They have expanded despite you passing on the GST benefits and despite an inflation in the input costs. I know that refined oil is down, but the quantum of LLP inflation is more than the quantum of benefit on refined oil. So your overall COGS basket has moved up. Your GST benefits have passed through. There is no additional price increase you have taken. So how is the gross margin actually expanding?
I think it's a matter of mix also, because again, like I said, that the SKU that is not really growing is sachet, and in the whole scheme of things, that's the second lowest gross margin. If the growth is coming out of the larger SKUs like 300, 500, your margins are bound to expand.
Okay. And one short question more, if I can squeeze in. The new launches that you will do in future, of course, you don't give a guidance, but would you be able to sort of tell me whether they are in the hair care space or they are, I mean, in other categories as well?
They'll be in all categories. The nearer launches or the launches that come up now would start from hair, then go into skin, and then into other categories.
Okay. That's all from me. Thanks and all the best, sir.
Thank you. The next question is from the line of Anuj Gupta from Perfect Research. Please go ahead.
Yes, sir. The question is answered. Thank you.
Sure, thank you. We'll move to the next question. The next question is from the line of Jinal Sheth from Multi-Act. Please go ahead.
Good afternoon, Mr. Malhotra. Happy New Year to you and your team.
Thank you, Jinal.
Yeah, just wanted to pick up on your comments of the trend in consumption. So just stepping back a bit, where earlier there was obviously a trend in Ayurveda picking up, and then you just mentioned obviously that has kind of slowed down a bit. So now it's Amla. Then taking that point a bit further, where Amla obviously is doing well, obviously since it's cheaper and delivers a similar benefit. So, and what I did see in our presentations were that in the total hair oil category, we have seen a slight blip in market share. So what I'm driving at is that how confident are you where obviously with a pickup in the rural, we will see a pickup in ours? Because what stops me from consuming Amla where it's deriving the same benefit, it's cheaper? Any thoughts on the same?
See, if you go back maybe 3 or 4 years ago, you realize that the trend was premiumization, and that's why the higher priced products like Bajaj Almond Drops and even the Ayurvedic brands which are much higher priced were growing much faster than the lower priced products like coconut and amla. Given the macroeconomy over the last 3 years, that has changed. However, I'm sure that like other categories in the FMCG segment, premiumization will come back to India. And that's why I've been harping on growth coming back and therefore premiumization coming back into the Indian FMCG scenario.
Okay, fine. Can you talk, considering the export has seen a massive decline, what has been the issue out there?
The issue is, first, there was a slowdown in offtake in the MENA and the Nepal regions, which are the two largest regions for that. And because of that, there was a breakdown in the infrastructure, which means the people and the distribution setup there, which now has to be corrected.
Okay, so when do we expect that?
This is on, and I think this quarter will be the last quarter you'll see these kind of disruptions.
Okay, and lastly, I presume we've not taken any price hikes until now, right?
Oh, no.
When would that happen?
Typically, if the prices of crude and therefore LLP keep rising the way it is, we will be forced to think about it sometime in March, because typically we take our price hike in April.
Okay. Thanks a lot, Mr. Malhotra.
Thank you.
Thank you. Before we take the next question, we'd like to remind participants that you may press star and 1 to join the question queue. The next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Hi, sir. Thanks for the opportunity and Happy New Year to you and your team. First of all, as the first participant also raised that in an era where everybody is putting out vision for 2040 and 50, you chose 2020, which is a very steep report card for yourself you have chosen. So, sir, is it a fair understanding after going through your PPT that the most objective KPI of your Naya Bajaj strategy will be the team's ability to launch new products in the stipulated time frame? Is that a right understanding?
Yeah, that's a right understanding, but a partial understanding, yes. I think what it clearly states is that improving efficiencies across the company. And I've also pointed it out in my opening address that Naya Bajaj actually means the most systematic and more efficient way of doing what we are doing at this point of time. There was a period in the opening address where I tried to sensitize you all that we are taking audits and trying to see how we can improve efficiency. I think that's the critical thing, because once you bring in the efficiencies, you are much more confident in launching new products, because it's not just about making a product, it's also about the research behind it, the thought behind it, the work in communication, the work in distribution, and it's just not making a product and putting it. So yes, that's a partially correct belief, but I think Naya Bajaj is all about improving efficiency rather than only launching new brands.
Sure. So, sir, in that balance, so broadly what we are seeing is that today, as the system exists both in terms of manpower and distribution infra, we are ready to take much more risk in terms of 4 products per year kind of run rate. So is it a right understanding that you pre-invested in last 2 years to create that kind of funnel, and now when the launches happen, even though gross margins are under pressure, the leveraging part, the operating leverage part of those investment will come into play, and margin contraction may not be as high as you are guiding as of now, at least in near future?
I think you put it perfectly. I can't add anything to make it even more simpler. I think this is exactly what we are talking about.
Sure. And sir, the last 2 quarters in particular, we are seeing this trend that modern trade is beating general trade in your revenue pie. Now, is it that so we can understand this is partly because in rural center GT is not doing well, but is it that in urban centers it is more of a cannibalization which is happening in favor of modern trades, and hence GT is losing share? So
no, Tejas, you're wrong here. Modern trade is a very small part of our current business. In the total company, modern trade would be between 6 and 7%. So it's not cannibalization. I think there are 3 things that you need to look. One is, like you rightly said, modern trade is urban and urban is doing better than rural. Second is, modern trade is also premium. People go there not for seeking value only. They look at better products, and therefore modern trade is better for us. The third thing you should also realize is the growth that came earlier from the general trade has been taken over by modern trade, especially for the larger SKUs, right? And these are the SKUs that are really growing at this point of time. We also have a lower market share in the modern trade than in general trade, so you're doing a little bit of catch-up. But I think it's more to do with the urban versus rural growths that you're talking about.
Sure. And so, couple of bookkeeping questions. Depreciation rate was sequentially high. Any update on that?
I think it's basically because of the Guwahati factory coming in and depreciation there rising. Apart from that, we have not added any assets, and therefore depreciation can't go up.
Okay. And so, tax rate for next 2 years?
At the current rate, I think definitely next full year will remain at MAT. Right? Post that, I think partially 19-20 would be mix of MAT and full tax.
So 19 will remain MAT fully, or
yes. Next full year will be MAT.
Okay, and then 20 will move slightly.
Yeah, depending on the growth, then 18, 19.
Perfect. Thanks, and all the best, sir.
Thank you. We have the next question from the line of Amit Sinha from Macquarie. Please go ahead.
Yeah, thanks, sir. So my question is on your efforts on expanding direct distribution. You have already stepped on expanding direct distribution, especially on the rural side. So how was the journey in the last quarter, and what are you targeting in the next 2-3 years?
Again, 2-3 years in today's scenario is a long thing. Like I said in my opening address, we have added 300 more people in this year. And typically, one salesman covers around 430 odd outlets. So currently, with 13 on 100 people, you would be in 5.5 lakh outlets directly. The next stage obviously would be gaining efficiency, getting these people into the mode of selling more in the same number of outlets, and then only future expansion will happen. But having said that, I think whether you like it or not, you will have to increase direct distribution, and if this strain on the wholesale continues, the wholesale sequentially is much better this quarter than it was last quarter. You would need to depend on your distribution task force rather than going only in wholesale. Also, keeping in mind the number of new launches we are looking at it, the new launch will definitely not go through a wholesale. So the stronger the direct distribution you have, the better the chance of success of your new launches. So keeping all of that in mind, direct distribution will have to keep going up quarter by quarter.
And also, you had mentioned earlier that you are targeting close to 8 lakh direct distribution in the medium term. So
we had said 20% of our total thing, which was 7.2 at that point of time.
Okay. Okay, so my second question is on your Brahmi Amla brand. Now, this quarter, you have mentioned that you have restaged the product. So this was mainly new packaging and getting a new brand ambassador, right? I mean, so because the product was there in the market.
No, that's not all. It's also sort of reformulating the whole thing into a Ayurvedic formulation, right? And therefore, it is not Brahmi Amla in a new package. It's a Ayurvedic Brahmi Amla to cater to the needs of the people who are really looking at Ayurveda as the thing. Also, if you look at the investor presentation, we are making a strong statement. It says ki Baal ka girna kare kab, which means that we are now giving a specific claim that can be substantiated by use of this product.
Okay, so my question was basically, so Ayurvedic product, so you had this in the last quarter also, if I remember correctly.
Last quarter was mainly in the modern trade, which
sure,
we tested.
Okay.
Now this we went into the general trade, which is a much larger part of our business.
Okay, sir, that's it from my side. Thank you.
Thank you, Amit.
Thank you. The next question is from the line of Aditya Joshi from Anand Rathi Securities. Please go ahead.
Yeah, thanks a lot, sir, for the opportunity, sir. So my question is related to international business. So what are the growth rates there in international business in MENA region?
I think it's there. It's minus 44% this quarter.
Okay, sir. Thanks a lot. And sir, second question was related to the depot optimization program that we have initiated. Sir, any cost savings we see there, and what kind of, how many number of depots will be having, say, 1 year down the line?
So we had 25, 26 depots. It's already down. We have stopped around 4 of them already. And this optimization, we are looking at bringing it down to 19. Now, the biggest saving here will actually be the fixed cost of operating these depots, because each depot you have, you will not only need space, but you'll need a computer operator, staff to load, unload, all these things. This is the biggest saving that you will have if you bring it down. With GST coming in, it makes it much more easier to build from anywhere in India to anywhere else in India. So smaller depots we have already closed down. We will be looking at optimizing depots in our largest area, which is the Hindi-speaking belt, in the coming quarters.
Okay, sir. And sir, that's it from my side. Thanks a lot, sir.
Thank you. The next question is from the line of Lalaram Singh from Vibrant Securities. Please go ahead.
Hi, my question is on the new product launches which we are planning. So in FMCG, we know that you have to invest significant amount in marketing and all, right? So any idea on what kind of money we want to spend on that?
I would love to answer that question, but you should realize that it also depends on the category you're launching a product. So let's say if you're launching a product in skincare versus maybe in any other personal care product, you would need very different amount of money behind advertising. So there is no ballpark figure saying that I will need 40% of sales as advertising. This is something which is very conditional to the industry that you're launching it in, as also the kind of competitive scenario within that industry.
Okay. So, can you give some commentary on whether that quantum which we might spend, will that affect the dividend payout which we have been following?
I doubt that.
Okay. Okay. Thank you.
Thank you. Before we take the next question, we'd like to remind participants once again that you may press star and 1 to join the question queue. The next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Hi, sir. Couple of follow-ups on the presentations. Sir, in one slide you have used this word, this words that our first priority is to our consumers and then to our customers. Is this a signal to much stronger focus on direct reach, or am I reading more?
No. There is customer and consumer. Consumer is the end producer of user of our product, and customer is the intermediate. So if it was ever a call between our distributors and consumers, we would be more focused on our consumers and not the pipeline that takes it to the consumer.
Sure. So second, you just made an interesting point on Brahmi Amla, how we are stressing on product efficacy. And if we see the launches which has happened across FMCG in last 2 years, especially after Patanjali came in, there is a lot of stress on product efficacy part. So just to understand the new product development pipeline that they've built, is it around this value proposition, or will be somewhere fighting on price, somewhere on distribution, somewhere on branding? I know it's a complete package, but where will we put our maximum weight behind in terms of launches?
If you remember the con call that we had last time, I said we're looking at differentiated products, right, with strong verifiable claims. So we are not looking at Me Too products. Bajaj Almond Drops is doing well, so make a duplicate of Bajaj Almond Drops at a lower price and launch it. That's not what we are trying to get into. We are trying to look at a product that is different in the consumer's mind. And the big change that you would possibly see in the coming quarters is this focus. One, claims that can be substantiated. Second, differentiation, and not another Me Too that will be launched into the market.
Great, sir. Great. And sir, lastly, sorry to stress this and at the risk of repeating myself, but in a hypothetical scenario that your first 3 launches or first 4 launches doesn't meet as your expectation, what is the team's resolve to go to the 5th or 6th product in that scenario?
Very hypothetical. When it happens, we'll have to see it. But that's about management. That's about the leadership. Despite failures, if you can keep your chin up, that differentiates you from a good company to an ordinary company.
Sure. And sir, lastly, you have used one word in your presentation that you want to also instill this entrepreneurship in your team and leadership. As we know, there's no ESOP plans for the top management or otherwise. So any thought on that part?
I think we are looking at it, but when it happens, I'm not too sure. But we have been looking at it, and if all goes well, it should happen.
Great. Thanks and all the best, sir.
Thank you. Participants who wish to ask questions at this time may press star and 1 on their touchtone telephone. Next question is from the line of Avinash from M3 Investments. Please go ahead.
Hi.
Thank you for the opportunity.
Can you come a little closer? We can't hear you properly.
Yeah, can you hear me? Can you hear me
Yeah,
better
yeah.
now?
Now it's okay.
Yeah. I understand that the saliency of the southern markets to the light hair oil product is much lesser than the rest of the country. Now, as you look to launch new products, either in the hair care space or in the skin care space, as you said, would you need to take steps to shore up your distribution infrastructure in the south, or what steps would you need to take, if at all?
I think rather than distribution, we need to have a product for the south, and there the innovation center will have to work very hard to bring a product for the south, because like it's often said, India is not a country, it's a continent, and what a person in Punjab may want and a person in Tamil Nadu may need are totally different, and the name of the game is not distribution. Distribution is obviously required, but I think first the product, and we are focusing on bringing a product for the south.
Okay. Now, you also spoke about, minimal cross-subsidization from your flagship product, by saying that the new products that you launch, you think would be high gross margin products and they would be able to support their own advertisement. Why is it incorrect to think, or why would it be if you were to think a little differently and say, I want to accelerate, product success, and therefore I'm willing to cross-subsidize even more?
The answer is simple. One, cross-subsidization actually means reducing spends on your mother brand. And if you start reducing the spend on your mother brand, the mother brand itself could be under strain. Second thing is, you don't actually need to do it. You have a EBITDA which is very healthy. So you can actually reduce EBITDA and build up new products. The third thing you should know is that we said that we will try and use the margins generated in the new launch over a long period. So you might have quarters where you cross-subsidize, but not for a very long period.
All right, I understand. Thank you so much.
Thank you. Anyone else who wishes to ask a question may press star and 1 on the touchtone telephone. Well, as there are no further questions, I'd like to hand the conference back to the management of Bajaj Corp for any closing comments.
Thanks a lot for dialing in and listening to the discussions we had on the company's performance. I think we are entering into a better period in the next 2 quarters, especially with the kind of support the government is going to provide to lift rural as well as the overall Indian economy. So like I said last time, very interesting times to come, and looking forward to speaking